Today is Thursday, November the 2nd, and I think I told you yesterday that I started trading KL because of this consolidation pattern which has been forming over weeks. And at the end of this video, I'm going to try to explain to you what I see in this pattern and how it's developed. I think it's really interesting, so I hope you stick around or fast forward till the end. So, FinViz is doing something nasty. It's being hijacked by this ad service. So, I'm just going to click on FinViz here and bring it up fresh. So, advancers led decliners, 50% to 44%. Volume was really good. Now, this is a string of days now where we've had pretty good volume, meaning there's participation in the market, but is there money moving into or out of the market? That's the thing. The stock market breadth, have we updated it for today yet? We have not. But yesterday, it finished right at the neutral line. Today, it's going to make another attempt towards the overbought area. And let's see if it can go higher. The momentum of money moving into the market can go higher than this point and this point. If it should fail and start to turn negative, then it could go all the way down to the oversold area. Let's take a quick look at the futures, which made their Globex high. Oh, sorry, that's yesterday. Let's pull this over here. Which made their Globex high at 2:40 in the morning, and then came back to test the Globex high at the open, and it pretty much stayed there right up until noon, when it made this big push up to almost 3,100 and then got slammed back down. Stayed around the Globex high, drifted, came back to test the Globex high, came down to the 50%, the 78.6%, the 38.2%, and finished the day just short of the 78.6. So pretty much on the 61.8 of the prior day, okay? So we've got prior day and Globex high, Globex low, Fibonacci's in here. So people are trading the futures. This is a really good little pattern to be watching. The Fibonacci's between the Globex high and the Globex low, and the Fibonacci's between yesterday's high and yesterday's low. Pretty interesting. I think next year I might start trading the futures. But anyhow, let's take a look now at the big charts, and let's go to the S&P 500, and let's look at it on a daily basis. And you can see that we finished not at the top, but a little bit below the middle. We did have a gap. We finished yesterday here. We started today here and ended up lower than what we started. But we can say that the gap that was created was self-filled in the same day. So I'm not going to draw a new gap. It's been filled, which could indicate, now that this gap has been filled, that we might be going higher. That's possible. I mean, there was pretty good news that came out of the US-China negotiations, where the Chinese are finally saying that they think they've reached a deal with the Americans to remove all tariffs in a phased way. But I haven't heard anything from the White House. Maybe they're just too busy with impeachment hearings. Apple, above 127.2. Pretty nice day today. Today it traded ex-dividend. So I actually expected it would pull back at least 77 cents, the amount of the dividend, but it didn't. It just started big and it ended big. Up 1.05%, 1.1%, which is better than the market. So I am in Apple, with short puts, and I'm just going to make money on the safe side going into the end of the year because I just don't know what's going to happen. Caterpillar continuing to chug forward, and look, the Chiku span is really flying high. Now this is a weekly, but now we've had 1 week above the cloud, and this is our second confirming week above the cloud, but the daily just shows that we're rocketing forward. So the weekly is the one to look for now from an Ichimoku point of view, and we've now spent 2 weeks with the Chiku span and the candles above the cloud. But we've got this flat cloud, so there could be some pullback, and then we've got this resumption in a positive cloud where the span A is on top, span B is on the bottom. Here it gets reversed. That's why the cloud is red. GDX, pretty miserable day today. I'm going to show you how this KL stock, which is a gold mining stock out of Canada, perfectly follows the gold miners ETF. But I'll go to that in a second now. T has filled the, well, it's already filled the gap over here, so let's just take the gap out. And T continues to move higher. When the dividend stocks are moving higher, that tells you that some of the money going into the market is going into safe plays, that if there's a bit of a pullback, they're still going to get their 5.5% dividend. Verizon is another one. WDC, still struggling now with the 200. How is the Chiku span doing? Dropped below the 200, did not get support on the 200, which means it could be going down even lower and could be going down to test the 200 simple moving average. But let's keep an eye on that. WDC is one that should be benefiting from China talks. Whirlpool, after this 38.2% and cloud bounce, a little bit of consolidating. As long as the market stays strong, this is going to be a good stock. Amazon, it's in the cloud, so it's going to be erratic in the cloud. We did, however, lose the 200 for support, but we maintained the 8 EMA on the candle for support. So we're finding these moving averages to be resistance for the Chiku span, and there's an awful lot of resistance up ahead in the cloud. So it's going to take till the end of next week before we clear this cloud. And let's see where the Chiku span is at that time. Let's go down now to the KL stock. And this, let me hide all of the stuff here. This just shows that I'm plotting the gold miners on the same chart as KL, Kimberley Mines. Kimberley Mines? It's called Kimberley. Anyhow, it's KL. GDX made much more exaggerated moves than KL did in its early days. But we had this wave from here to here, and this pullback, and then this wave, and this pullback, and then this wave. So I drew some Fibonacci's on those. Let's get rid of the GDX now that we've verified that there's a definite trend between where KL goes and all of the other gold miners go. But there's one thing that's a little bit different than KL, and that's this consolidation pattern. So let me put these things back on. It's this consolidation pattern that Trader Stewie on Twitter pointed out yesterday that looks ripe for a breakout. It started back here. This is our first point on the consolidation. So we have it here, and this is our other point, which we anchor to here. And we can see that over the 12-week period, let's go to the daily. And now let's move this to the daily. So still over a 12-week period, we've moved from this point to this to form the base of this cone. Came down here to start a trend line, came up here to start another trend line, and now we look, after we've got 2 points, it's not a trend line, but now we start looking for trend lines. And when it went down and came back up, it fell short of this line and short of this line, didn't add to the trend line until it came down here and spent a few days, maybe a week, creating now a solid bottom trend line, and it went up to now create a top trend line. We can take those two trend lines and extend them into a cone shape, and if the stock bounces in between these two trend lines, it's going to reach a point where it's going to break out. It's going to break up or it's going to break down. So when it broke up here on its second attempt to break out, I purchased 500 shares. Today it pulled back, shot up and pulled back. Its motion today was really something to see. It shot up at the open, dropped precipitously, then shot back up again and closed the day a little bit low. This is what you call a shakeout pattern. Now, did we have the volume to accompany it? Yes, we did. We've now had above average volume going back to October the 25th. This indicates that more than the retail mom and pop people like us is getting involved in this stock. More days have been above the 20-day moving average than the two that have been below. Today was a classical shakeout day where we finished right in the middle, right on the trend line. We finished below, right in the middle of the low point of the day and the high point of the day. I mean, right at the middle. This is a sign of strength. If we do come down and hold this line, this trend line, and that may take a week to do, and it bounces up, then it's going to break this pattern to the upside, and pattern traders are going to double down here and get involved. And if it comes down here, and I'm going to create an alert, if it touches this trend line, I want to know, because I'm going to keep my eyes on it, and any bounce up with a confirmation, I'll let it take 1 day to bounce up, with a second day to confirm, and then I'll buy the next 500. So now let's look and see what else makes this a little bit unique. These wave patterns, remember I showed you on the weekly chart, this wave pattern up to here had a pullback to this point, which was the 200 and EMA that was support, and it was support here again and here again. So 3 times it used the 200 for support, and then it created this wave. So what I did is I created this type of Fibonacci. It's called an extension, where you take point 1, point 2, and then point 3, which was the bounce, and say what Fibonacci's now would replicate this up move starting from this point. And these are, let's make sure we know which our colors are. These are the green Fibonacci's. So the green Fibonacci show that the top of this wave was in between 78.6 and 88.7. I'm not a big fan of 88.7, so I'm going to take it away. Now I've got a Fibonacci on this wave, from this point to this point. This is the blue Fibonacci's. And if we're going to extend above this Fibonacci, let's see where we find points that coincide with this set of Fibonacci's. So we've got the blues and we've got the greens. Let's see where they match each other. And there's one critical one right up here, this 38.2%, which is, can we open that up and see what that is under there? We can't. But it looks like it's the that's the 178.6. That means it's the 168.2. Both of these coincide, and sure enough, this is where we had the first point of rejection. We tried to break out and get up to the 178.6, but we didn't, and we started to form this consolidation. So the Fibonacci's and this cone-shaped pattern and support on the 200 and then on the 50s would indicate that this should or could break out to the upside, and that's the way I'm going to play it. I will get out if we break out to the downside. As soon as we fall out of this cone on volume, I'll get out. But right now I'm looking for possibly this, followed by this. And maybe we'll just get this all by itself. Now it's going to take two things. One, it's going to take some interest in gold, but it could be that this stock might move independently of gold because traders are looking at the pattern. Trader Stewie called for a possibility of 52, and that's right around 178.6. So he's calling for the stock to be anywhere between this high and the 178.6. So that's going to be the area that we're going to look for to sell. So that added another 5 or 6 minutes onto the video, but I hope that it was helpful. If you have any questions, just ask.